what is the market doing? It's autos and autos all the way. So Tata Motors holding up almost 5%. Uptick is what you're seeing on the futures right now. And you've got the DVR as well in tow. So another 4.5% uptick coming in there as well. You've got Eicher Motors after upping their capacity guidance, holding up 2.5%. And then there's Maruti, which is holding up by a solid 1%. Hero MotoCorp as well, while a large chunk of the move really played out yesterday itself. But Hero MotoCorp, after putting or rather posting those stellar set of monthly sales numbers, Hero MotoCorp puts on another roughly about 0.5% in today's trading session. So let's exactly discuss this. What is the demand on ground and whether or not the move in the ancillaries can continue further or not. We've got on board with us Vinod Aggarwal, the CEO at VE Commercial Vehicles from Eicher, joins us on the show right now. Mr. Aggarwal, hi, morning. Talking specifically about you at Eicher, while your volume growth has come off from 50% plus run rate, it's still sustaining high double-digit growths. Let's talk about the most recent sales numbers for the month of March, that is. Is it the improved macro indicators that's aiding the up move, or is it the demand higher on the back of regulatory changes such as scrappage policy, overloading ban, e-way bill, etc.?
No, basically the CV industry, if you look at after 2011-12, it had been suffering because of various disruption, one or the other. And now after 6 years, this is come back to the almost, you can say, at the same levels of 11-12 or even grown from that. So, basically this we have witnessed huge positive sentiment in the industry after 6 years, and this has been this has come from various factors, started with overloading restrictions and GST related benefits, or various other things like infrastructure push. So I think this is a basically good time now for the CV industry.
Mr. Aggarwal, stay with us, and I'm also going to bring on board our second guest today and talk about how real is this revival. I also have with me Harish Seth, the CMD at Setco Automotive, joining in. Mr. Seth, morning. Now, CVs have grown at a strong 20% rate in FY18, and MHCVs have contributed a fair share to the rebound as well. Has the demand seen a similar uptick in the components industry too? What's your sales growth that you've seen riding on this recovery?
Yes, component industry is doing rather well. The growth in last 3 quarters across the board has been very good. In our particular case, we have almost in last 3 quarters grown by about 45%.
Okay.
Hello.
Right. Also, Mr. Sheth, analyst believes that the auto component industry has grown the fastest in the last 6 years. Out of this, what is the share of CVs that you have, and where do you see this figure actually rising up in, say, the next 2 to 3 years?
Well, as far as CV industry is concerned, we have almost have 85% of the market share in India as far as the OE is concerned. But you must remember, in our business, the OE accounts at the end of the day only about 40% of business. 60% of the business comes from aftermarket and exports. As far as the clutch industry is concerned, there is a high kind of a market as far as the aftermarket is concerned. So that also benefits us. Going forward, we see growth coming from 2 areas. One area is the OE demand, double-digit growth that will add a lot of value to us. Also, the more vehicles on the road, more is the demand of the clutch in the long run. So that will also help us a lot, particularly with the government investing in the agriculture sector, infrastructure sector, now mines opening up. So all this augurs well for us. And we have now gone into tractor industry also. We have diversified last year. And because of the agriculture growth, we see that also as a good market. So Setco Automotive is poised for a substantial growth in the coming years.
Mr. Aggarwal, looking at the news flow and what feelers we've got from the ministry, my sense is that scrapping policy is coming and it is not even 3 months away. Now, what do you think would be the immediate impact of the scrapping policy, both in terms of demand and also in terms of what will happen to the CV sales?
No, definitely scrapping policy is going to be a big boost for the entire industry because there are already a replacement cycle which is going on, which is there. Like for example, if in 2011-12 there was a sale of 240,000 heavy duty trucks, that all are likely to come for replacement as it is. Now on top of it, if the scrapping policy comes, which are scrapping for more than 12 years or 15 years trucks, that will give further boost, even though I personally don't expect that it will contribute very large numbers, because as it is, those old trucks, 12 to 15 ton old trucks, 15-year-old trucks, they are plying in, basically you can say, in the C category areas, not on the main highways. So you will see they will have a staggered replacement cycle, maybe every year around 25,000 or 30,000, like that, but not in big numbers. But of course, that will be a boost for the CV industry.
Okay. What is your sense as to what is the average age of Indian fleet on the road? Because this scrapping policy is about scrapping old fleet. So do you think the average, what could be the average fleet size on the road on Indian roads?
If you look at the big fleet operators, they normally replace their trucks in you can say 5 to 7 years time. But if you go to the lower than that, or retail operators, they may operate at slightly older trucks. So basically, it ranges from the first hand it is 5 to 7 years, then it gets to 7 to 10 years. Then of course, 12 and 15 years could be the C category jobs, which don't go long distances. So there are different types of customers who have different age of vehicles.
Mr. Sheth, how are you looking, or how are you mapping the kind of numbers that you hope to clock in FY19? If everybody is pricing in a revival in CV demand, what could that do for the overall numbers on the ground? Sorry.
Well, as far as SETCO is concerned, we are looking at a growth of 30% plus in the next year. And as we have stated earlier, by 2020-21, we would be a 1,000 crore company. So next few years, we are looking at a good growth coming out of exports, tractor market, CV industry, aftermarket business from the CV industry, not only OE. So overall, SETCO is in, and we should be able to tackle that.
And Mr. Aggarwal, same question to you, and I particularly ask you in the context that either ways the auto industry is talking about going the e-vehicle route. Tesla is also pretty much sampling their e-truck model. Now I know this may be a far-fetched theory, but even so, what kind of innovations are you working with, given the fact that the CV cycle seems to be on an upturn?
No, as far as e-vehicles are concerned, you will first see it in buses. So I don't expect any movement in e-vehicles for the trucks in next 5 years in India. Otherwise, as far as the growth is concerned, we are looking at good growth coming in next 2 years at least till BS6, because now of course the customers are very, very positive. This is basically, the entire market is driven by sentiments, and the sentiments today are very positive, which have come because of various factors. One is that because of GST, there is lot of demand on the efficiencies. So productivities are become very important. Now the customers are talking of delivery within hours. Earlier, there was not much focus on the delivery time. Like e-commerce companies, you have to deliver absolutely on dot. Similarly, white goods transportation, or movement of containers from ports. So earlier, if these were done by the older trucks, now there is lot of demand coming for replacement of those older trucks. All the fleet operators, they are renewing their fleet because there is lot of demand on efficiencies. So this is one factor contributing. And then overloading restrictions is contributing in a major way. For example, if earlier a transporter was able to do with 10 trucks, now he needs 15 or 20 trucks, because now there are huge restrictions. For example, when you are crossing the toll, if you are caught with an overloaded truck at a toll, the fine is 10 times the normal toll. Or similarly, if the regional transport authority they catch a overloaded truck, the truck can be impounded. So then the transporters are getting away from overloading, and they are getting into the rated payload categories. And when the rated payload happens, then they have to almost 1.5 times or 2 times they have to increase their trucks. So this is contributing to huge increase in demand. And then of course, because of the economic activity, specifically in the infrastructure, lot of investments which are coming in infrastructure, so that is driving the demand. For example, if there are irrigation projects, or if there are new cities which are coming up, like Amravati is coming up there in Andhra Pradesh. Similarly, if there are more work starting on the smart cities, so you will see a lot of demand coming in from these factors. So I am looking at good period for the CV industry in at least next 2 years till BS6. BS6, of course, again the prices will go up. But now the customer is very comfortable with BS4 technology. Now in the initial period, for example, in the Q1 or Q2 of 17-18, the customers were not very sure, or they were having some apprehensions about new BS4 technology. There were a lot of confusion on SCR and EGR. All those apprehensions have gone. So once the apprehensions have gone, now the customers are very positive. So they want to now, they want to go in for the new technology trucks. They are absolutely.
Mr. Aggarwal, I'll have to interrupt you there. We're completely out of time on this discussion. But thanks very much to both you and Mr. Sheth for joining in and giving us a perspective on where we stand as far as the revival in the CV cycle goes, because that's seen as a proxy to the investment cycle picking up. So if it's good news there, then that's a plus for the economy.